All right, assalamu alaikum.
So this is the section for finance reporting introduction, or you can say finance reporting F7 orientation. Okay. So firstly, a brief introduction for myself. My name is Zeeshan Hasan, and overall teaching experience till now I have of 15 years. Okay. Um, I have a working experience in Deloitte, which is a big four accounting firm as well. Furthermore, I also have a working experience in SIGPA in Pakistan as a finance officer. Okay, um, and currently at Dollins Private Limited, which is a manufacturer of home appliances, and they are also work as finance officer in treasury section. And first, I'm a blog writer for ACC from Pakistan. Well, that's my brief introduction. Okay, so far, so good. Let's move ahead. Here are the shining stars of, you can say, my students or accountancy, finance reporting F7 shining stars. Um, Umar Khalil Sheikh 97, Egypt top, Fatma Zara 95, Middle East top, with the recent. Okay, and these are the reasons top shining stars. You can say of last 1 year. Okay, Rabia Imtiaz, Rehan Said, Samir Rahman, Sadiya Shakti. And these are not well. All of these students were not extraordinary, even though some are those who were repeating their exams. So if they can do it, believe me, you can do it as well. All you need to do, you have to be disciplined in your studies, and you have to be motivated towards your and regular in your studies, and you can achieve this as well. So now moving ahead, these are the finance reporting global pass rates, seven pass rates. In March, it was the highest passing rate, 52%. Still, 48% is failed this exam. In December, it was 48%. In September, it was 47%. In June, it was 49%. That means, except for this March, 24 exams, more than 50% students are failing in it. So, what's the reason? Why? Now, you might be thinking that why students do fail in FR. Well, there are plenty of reasons, right? What are the reasons? Either students are taking it very lightly. They are taking this paper very lightly. They are like, oh, it's just like a FA, financial accounting F3 paper. There will be not so much difficulty in it. So they take it do lightly. And probably they do not take lectures for it, the classes for it. And that's the reason they fail. Uh, Lack of understanding of IAS, IFRS, right? That's another reason. um, Lack of practice, lack of practice in IAS, IFRS, um, lack of practice of exam questions, including OTQs, Section A questions, Section B questions, a lack of practice of Section B question, uh, don't know writing skills of ratios. That is another reason. that they don't know how to write the ratios, what, how to calculate it, how to write the ratios, how to explain it well. In short, they don't know the exact exam techniques of writing the ratios. These are the main reasons of failure in financial reporting at 7 paper. Now, accountancy, finance reporting passing rates, as you can see, in March 24, wow, it was 88%. That means only 12% did fail. Right in December 23, it was 83%, and in September and June 23, it was 80% each. So you see, at least 30% higher than global passing rates. Now, what are the reasons? First of all, I do explain each and every standard in detail. We do take topical wise tests for each topic. Um, do explain the exam technique for each of the people, that each of the topic, and then finally the mocks and all. That's the reason that accountancy students get these much marks in financial reporting. Right now, let us discuss about the conceptual, the course outline of financial reporting. Okay. Um, as far as the financial reporting course outline is concerned, in firstly, what we will have the conceptual and regulatory framework for financial reporting. So, in conceptual and regulatory financial reporting, first thing which students will face, uh, have to deal with is the need for a conceptual financial reporting. Okay, the need for a conceptual framework and the characteristics of useful financial information, recognition and measurement criteria, regulatory frameworks, and the conceptual and principles of groups and consolidated financial statements. Okay, so in these areas, what you have to do actually deal with it. Describe what is mean by a conceptual framework for financial reporting. Discuss whether a conceptual framework is necessary and what an alternative system might be. Discuss what is mean by the relevance and faithful representation and describe the qualities that enhance these characteristics. And then discuss whether financial representation constitutes more than compliance with IFRS. Discuss what is mean by understandability and verifiability in relation to provision of financial information. The discussion of the importance of comparability and timeliness to the users of financial statements. Okay, discuss the principles of comparability in accounting for change in accounting policies. So this is what is covered in this section A, and this is often tested in your section A and B questions. Okay. Um, Then we have section B, tangible non-current assets. That is our IS 16. Okay, IS 20 government grants, IS 23 borrowing costs, IS 40. These are the standards, accounting standards which covers over here. IS 38, that is our IS 38 intangible assets. Okay, impairment of assets, that is our IS 36. Okay, inventories, IS 2. Agriculture, that is our IS 41. Agriculture. Financial instruments, one of the topic which students found very difficult, that is financial instruments. IFRS 9. Okay, leasing, IFRS 16. Oh, sorry, yeah, IFRS 16. Provisions, IS 37. Events after reporting period, IS 10. IS 12, that is taxation. Reporting financial performance, uh, IFRS financial performance, that is another part. Revenue, IFRS 15. Okay, government grants IS 20. Okay, foreign currency transaction IS 21. So these are the areas which will be covered over here. So intangible non-current assets, we will discuss, define and compute the initial measurement of non-current assets, including borrowing costs and an asset that has been self-constructed. Okay, identify subsequent expenditure that may be capitalized, distinguish between asset and expense items, discuss the requirements of relevant IFRSs, accounting for revaluation and disposal and gains of non-current assets, compute depreciation based on the cost and revaluation models, discuss the treatment of investment properties, apply the requirement of relevant accounting standards on investment properties. Okay, in intangible assets, we will discuss the nature and accounting treatment of internally generated and purchased intangible assets, distinguish between goodwill and other intangible assets, describe the criteria for the initial recognition and measurement of intangible assets, describe the subsequent accounting treatment of intangible assets, describe and apply the requirements of relevant IFRSs. So that will be covered in IS 38 and IS 36 impairments. Define, calculate, and account for an impairment loss, including the principle of impairment as relation to goodwill, accounting for the reversal for an impairment loss on an individual assets, identify the circumstances that indicate impairment to assets, describe what is meant by cash generating unit, the basis on which impairment losses should be allocated, and allocate an impairment loss to the assets of a cash generating unit. Uh, in leasing, account for right of use assets and lease liabilities and records of the lessee. Explain the exemption from the recognition criteria for lease in the recording of the lessee. Accounting for sale and lease by transaction where sale proceeds are equal to fair value. In inventories and agriculture, describe the and apply the principle of inventories. Apply the requirements of relevant ISIFRS for biological assets and agriculture produce. In IFRS, we will discuss the explain the need for an accounting standard on financial instruments, define financial instruments in terms of financial assets and liabilities, explain and account for the factoring of receivables, indicate the following categories of financial instruments, how they should be measured, and gains and losses from subsequent measurement. Be treated that is amortized cost fair value through other comprehensive income, fair value through profit and loss, distinguish between debt and equity. Okay. Uh, Apply the requirement of relevant IFRSs, equity, redeemable preference shares, amortized cost, convertible debt. Okay, in lease and account for right of use asset, lease liabilities in records of the lessee. Explain the exemption from the recording recognition criteria for the leases in the records of the lessee. Account for sale and leaseback transactions. Then provisions, and even after the reporting period, explain why an accounting standard on provision is necessary, differentiate between legal and constructive obligation, when provisions may and may not be made, and demonstrate how they should be accounted for, or provisions should be measured, uh, define contingent assets and liabilities, accounting treatment and required disclosures, even after the reporting period, that is difference between accounting for adjusting and non-adjusting events. Okay, identify items requiring separate disclosures, including their accounting treatment requirements. In taxation, account for taxation in accordance with IFRS accounting standards. Okay, explain the fact of taxable and deductible temporary differences, compute the record deferred tax amounts, reporting financial and non-financial performance, discuss the importance of identifying and reporting the results of discontinued operations, define and account for non-current assets for sale and discontinued operations, indicate the circumstances where separate disclosures of material items of income and expenses is required, account for changes in accounting, estimates changes in accounting policy, correction of prior period errors, uh, explain the criteria for recognition revenue, where performance obligations satisfied over time at point in time. Describe the acceptable methods for measuring progress towards complete satisfaction of a performance obligation. Explain and apply the criteria for the recognition of contract costs. Apply the principle of recognition, revenue, etc. Prepare financial statement extracts. Then we have government grant. Apply relevant accounting standard in accounting for government grants. Foreign currency transaction explains difference between functional and presentation currency and explain why adjustment for foreign currency transactions are necessary. Account for the transaction of foreign currency transaction and monetary non-monetary foreign currency. Analyzing and interpreting the financial statement of single entities and groups, that is indicate the problems of using historical information to predict future performance and trends. Discuss how financial statements may be manipulated, explain why figures in statement of financial position may not be representative of average values throughout the period. For example, seasonal trading, major asset acquisitions, explain how the use of consolidated financial statement might limit interpretation techniques. Um, okay, so far so good. So in section C area, analyzing and interpreting financial statements, limitations of financial statements. Yeah, we'll be discussing calculation and interpreting of accounting ratios, limitations of interpretation techniques, and not for profit and public sector entities. That is our section C area, limitation of interpretation techniques. Here we have to discuss the use of ratio analysis, discuss the effects that changes in accounting policies, compare the useful of cash flow information, explain why trend of EPS may be more accurate indicator. Okay, not in not-for-profit sector, explain how the interpretation of the financial statement of the public sector might differ to the different aims, objectives, and reporting requirements. In section D, prepare entity statement of financial position, profit or loss, other comprehensive income, with the structure and content prescribed within IFRS. That is within area syllabus A, B, and C. Prepare the contents and purpose of statement of changes in equity, extract from the statement of cash flows. Okay. Uh, and then preparation of consolidated financial statements. Prepare a consolidated statement of financial statement for a simple group, a parent, and up to two subsidiaries controlled by the parent and one associate of the parent, dealing with pre and pro acquisition profits, non-controlling interest. Prepare a consolidated statement of profit or loss and consolidated statement of profit or loss and other comprehensive income of simple group. Explain and account for the other components of equity, for example, share premium, revaluation surplus. Account for the effects of intra-group transaction of assets and intra-group dividends, etc. So that's our course outline. Now, what will be the teaching plan? Teaching plan is like, we will complete ISIFRSs first. After every 3 or 4 ISIFRSs, we will be doing practicing their relevant MCQs and OTQs in live and recorded classes. After completing the ISIFRSs, we will be moving towards single entity financial statements, or you can say final accounts. Okay, after that we will be doing ratios, and then after ratios, in the end we will be doing consolidation, and that will cover our course. So that's it for the introduction. For the admissions and